In this video, I'm going to talk about the 3 white soldiers and 3 black crows trading strategy. Stay tuned. Hey traders, a very warm welcome to you. So this Forex trading strategy is called the 3 white soldiers and 3 black crows. I'm going to run through the candlestick pattern, but if you're not familiar, I've done a video previously. Go and check out, go back and have a look and see about the actual 3 white soldiers and 3 black crows candlestick. I'll run through it quickly now, but if you want more detail, go and check that out right now. Okay, so the candlestick pattern is this. 3 white soldiers is 3 solid green candles. I don't know why it's called white soldiers. Maybe it should be called green, I don't know, frogs or something, whatever. The point is you've got 3 candles, whatever time frame you're looking at, that are solid. They've got a solid body and they're pushing from low to high. Low to high, like a trend in each of the things. So for the day, 3 good days of trend. It's a 1 hour, 3 hours of good trend. No real, I mean, in the real world, you're going to get little wicks, you're going to get little tiny things. But the point is, you don't want any of this nonsense. You don't want a doji, you don't want, kind of a hanging man or a hammer or anything like that. You've got to have nice, solid, good, long bodies. So that's your that's your white soldiers. Your black crows or ravens, sometimes people call them. It doesn't really matter. It's the candlestick pattern, not the name of it. It really matters, guys. Is it want to make some money out of it, not kind of win points about where it's right or wrong. So it's the same thing, but just being in reverse. So you've got high to low, solid red. If you've got that, if you've got it set up like that on your chart, should I say? But you got the point. It's good trending over the 3 periods that you're looking at. You can go to a lower time frame. You definitely can, but the lower you go, the more you're going to get whipped around. So we're going to look at some time frames here. We've got a daily, we're going to look at an hourly, and I'm going to show you a 5 minute as well, just for comparison. So the idea of this is we look for this strategy, we look for this candlestick pattern, should I say. So the 3 to the upside or the 3 to the downside, and we're going to go long on a break of a move of the price above the 3 ones to the upside. So if these are the 3 white soldiers, we're going to go long on a break above, and if we're going to see if we see the 3 black crows, we're going to go short on a break below. Let's look at an example that will clear things up because my drawing is dreadful. So let's look at an example. Okay, US dollar JPY here, daily chart, pretty standard stuff. And here we have one here. It's okay, like with everything, guys, you've got textbook stuff and you've got real world stuff. You're going to have a line you draw where you don't take the trade. You're going to have a level. And the game we've got as traders is this, is that the more flexible we are and the more trades we let in, the more we're going to get stopped out, but the more trades we're going to take. And the tighter we are the criteria, the less trades we're going to take, and hopefully the idea is we're going to take, you're going to make more money. But it doesn't always work like that because you end up missing a monster move because you're not as flexible. So that's the game that you've got to play as a trader. So anyway, this is the kind of thing we're looking for. So here, let's zoom in a little bit more. And let me drag it across a little bit in front of the screen so we can see. So I'm calling this a 3 white soldiers setup. 1, that's my first, there's my second, and there's my third. So I'm seeing them. Granted, that's not as long and that's not as long, but in reality, if you're looking at textbook, you want long, the longer the better. So 3 really long ones. But also don't forget, the longer you have, you start chasing that stuff, there's a pullback due. So it's a fine line. Anyway, the point is, you see a strategy where you see 3 good days of move or 3 good hours, whatever it's a move. You want to go long above, so I'm going to go long at this point here. A few ticks above, usual thing, guys. You don't want it exactly at the high or low. You want it a few ticks, give it a little bit of wiggle room. You don't want to be caught just going long 1 tick above. So maybe have a look at the range. Obviously, if you're on a daily and it's like a 200 or 300 pip move, you can go 10 or 15 pips. If you're on a 5 minute chart and it's a 40 pip move, you can go 5 pips. You get the idea. You understand the concept of that. So we're going long here and stop. Again, this is the foundation is here, but the juice of trading comes in tweaking stops, tweaking things to suit the market conditions. If you're trading looking for a kind of monster breakout move, and this kind of happens as it breaks out of a key level as well, or off a low or something else, you might say to yourself, you know what, I don't mind using a 200 pip stop because I'm looking for 1,000 pips, or I don't mind using 50 pip stop intraday because I'm looking for a 4 or 5 day 300 pip move. You've got to put things into context and into and formulate a plan based on the market conditions. So a stop idea is to use the width of the whole thing. Maybe a little bit better would be just use the low of the last candle. So if you're using that 3 white soldier strategy, your stop's going to be just under the low of that candle. Okay, now where do you take profits? Again, up to you. This isn't a great example. It looks like you've got a profit target here. I mean, in the day, guys, this has moved in your favor by multiple amounts. Yes, you're going to have to sit through some pain, but the point is, if you're looking for a longer time frame, you're going to make some money out of it. Let's look at a shorter time frame as well. We're an hourly chart here. Same setup again, but flipped in reverse. So it's the 3 black crows, or 3 red, I don't know what you can call it, red vampires, whatever. Maybe I'll make a new name for it or something. So there's your high, there's your 1, there's your 2, there's your 3, there's your bracket. You're going short on a break of that, and this is a better example, isn't it? It's much clearer, and obviously it's better from a terms of perspective of there's money on the table here. Your stop is going to be, if we use the stop above the high of the last candle, there's your stop loss there. Okay, or if you're extra kind of I can't write, but if you're extra conservative, your stop will be here. Maybe it's a little bit too wide for a kind of hourly thing. Your trigger short is here, so you're in a few pips below the low, and you're off. Do you want to take some out when you get a 1 times your risk? Probably. 2 times your risk? Probably. 3 times your risk? Probably want to be most of it. And then my guess is you're going to trail a stop and sort of drag it behind there, and you're going to be out maybe here. Or maybe you say to yourself you're at break even, or you're back to whatever. Again, this is the kind of things you can play and tweak with the strategies. I'm giving you the foundations and the theory behind it, which is momentum started, 3 big bars in a row to the upside or to the downside. An easy way of joining that momentum, which is purely a breakout type play. Let's look at it drill down even more on a 5-minute chart. Similar kind of stuff, guys, but obviously smaller time frame, less risk in terms of pips, more frequency, but you've got to measure that in terms of, do I take too many, do I take too less? You get the idea. We've got one here. Just about, I'd say you can just about take that. There's your stop loss here, there's your entry here above that high. That's the beginning of the 3, 1, 2, 3. There's your long, and you're kind of either scalping stuff off. In actual fact, the better trade is the one on the downside, isn't it? These are 3 side ones, and actually this one is a nice one to look at in terms of candle shape. Let's clear this out so we don't get any confusion. Get the brush. Okay, that's the first one here, so I'm drawing it on the high of the first one. Number 1, number 2, number 3. There is my low point, and I'm going short as we break through it. So my short is going to be here. Now, obviously, in this example, if we use a stop above the high of this, we're pinged out here. But on a lower time frame, we can afford to be a little bit wider, because what you don't want is to be so narrow that you're getting pinged out on noise. And this is the kind of yin and yang of stop loss placement, isn't it? I've done a video on this before. You have it too tight, okay, you risk less, but it's death by 1,000 cuts. You want it just enough so noise doesn't ping you out, but you're still coming out if the trade goes against you. So regardless of that, this is something that you go in, you take the short, and if you weren't using that, if you're using a stop up here, or using a stop 50% of the move, using a fib or something like that, or X number of pips, maybe you're in it, and maybe this is the kind of thing that you're looking for, a big move to the downside to take profits on. So one caveat, one side of kind of disadvantage that we've obviously seen with our own eyes with this is you're chasing a little bit. Now, if you've got an idea that you want to catch a lot of the move, you kind of prepare to chase, you're prepared to sit through some heat. For me, I'm a little bit cautious about chasing, so I like this strategy, I like the idea of it, but I'm going to have an extra filter in place. And I'd like to know your comments below the video, what you would like to see or where you would like to see this scenario. For me, a nice scenario would be, let me clear the screen out and kind of draw this for you and see if you agree on this. Again, let me know your comments, guys. But if we had a downtrend, okay, we'd kind of put a low in, we'd maybe retested through the low, faked out, then we saw the 3 white soldiers, I would take it then, because I'd feel like, even though I'm chasing the breakout in the context of that, in the context of the bigger picture, I'm still buying in the low third, and I'd like that. I think that's okay, and I probably would use a wider stop with that. I'd probably say I could have my stop under those three white soldiers, and vice versa. So to me, as with all these strategies, it's where the pattern happens and in what context and in what overall environment, and the bigger picture counts for a lot. So that's the strategy, guys. 3 white soldiers, 3 black crows. Let me know your thoughts on that. As always, give it a thumbs up if you liked it. Don't forget to subscribe and check out other videos from me and other traders on this channel. Good trading. Take care. See you in the next one. Bye bye.